Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, across the European indices as well, we saw a bit of a cut as the Turkey's deepening economic crisis sparked contagion fears. The UK's FTSE slipped about 1/3%, while the German DAX also fell about 0.5%. The French index, however, closed just below the flat line. Most peripheral indices finished in the red as well. Individual stocks, Bayer was in focus. Poor set of numbers, and that stock tanked over 10%. The emerging markets, that one should come up for you. Remember, yesterday we saw a sharp cut, or at the previous trading session, we saw a sharp cut in the Russian as well as the Brazilian index. And in yesterday's trading session, a mild pullback from there. The Brazilian index ending higher by about 1.5%, while the Russian index also posting gains of about 1/3%.
Okay, well, let's tell you about the currency space. We've been reiterating and pointing out about the details on the Turkish lira. So for overnight trade, the Turkish lira clawed back some of the losses on Monday from a record low after the country's central bank said it would provide liquidity and cut reserve requirements for banks. Meanwhile, the euro has plunged to a 13-month low and hammered emerging market currencies as investors worried about a possible contagion emerging after the Turkish lira fall. Okay, on that note, here is some opinion from global currency experts on the implications of the possible looming financial crisis in Turkey.
I think the one thing you can absolutely say is that you've had calming measures from the central bank. They've added a little bit of liquidity, and you've also had some kind of control as to the scale of foreign exchange deals that can be done with Turkish banks. If you look over the course of the last few months, it's been fairly clear that the market's been pricing in 500-600 basis points of rate hikes here, and we're nowhere near that. So I think if they're really going to have to do something aggressive to support the currency, it's going to have to be 500 basis points plus easily.
There are a number of factors that's hurting Turkey right now. The big dollar strength is clearly a very important trigger, but at the same time, policy mismanagement domestically, the U.S. sanctions against Turkish officials, all of that adds up to really burden the currency as we speak. And as a result, I think the market is concerned that it's going to potentially spread to the rest of the region. But if you look at the direct linkages between Turkey, even to Europe and the rest of the world, it's somewhat limited. It's very similar to what we discussed a few years back when Greece was under a huge amount of pressure. It captures the headline, but the direct economic linkages are manageable. So I think, while there are still a lot of pressure points at this point in time, the fundamentals of Asia, especially for current account surplus markets, I think is still in reasonably good shape.
All right, so let's take a look at how crude prices were in the world of commodities. Oil prices edged higher after a report from OPEC confirmed that top exporter Saudi Arabia had indeed cut production to avert looming oversupply. The OPEC said that the demand slowdown would come on the back of potentially lower economic growth as a result of trade disputes between the United States and China, as well as the emerging market turmoil. Welcome back. You're watching Power Breakfast on CNBC TV18. Back home on Dalal Street yesterday, the market tumbled in trade, ended near the low point of the day. The Nifty slid about 75 points, also gave up the 11,400 mark, while the Sensex too slipped more than 200 points. It was the banking index which underperformed and tanked more than 1%, led by public sector banks. Follow-on selling seen on State Bank of India and the other banks too. The mid-caps, however, remained resilient, managed to hold on to the 19,000 level, ended mildly in the red, but still outperformed the other peers. What are the cues that are stacked up today? Well, we have Anisha Jain joining us in orange to tell us the cues to watch out for today. Morning, Anisha.
Good morning, Mangalam. Thank you so much for that. But yes, you guys have been talking about how the Turkish lira hit a fresh record low yesterday, and the contagion effect was seen across equities and currencies yesterday. Now, for example, not only the rupee hit a fresh low of around 69.93 yesterday, it was the biggest intraday decline that we had seen since September 2013. Euro is at a fresh 13-month low, trading around at 1.14 to the dollar mark. South African rand was a lot volatile yesterday, ended a 1.5% lower, and similar was the case for the Mexican as well as the Argentinian peso. The impact was seen across equities as well. You mentioned how the Indian equities ended around 0.5% lower yesterday. The Asian markets yesterday were under quite a bit of pressure, and after we closed, the MSCI EM ETF was down about 1.6%. The European stocks was down around 0.25%. DAX was a bit of underperformer when it comes to the European markets, down about 0.5%, and the impact was seen in US as well, with the Dow ending around 0.5% lower. Yes, the stocks like Amazon and Apple did try and support the Nasdaq a tad bit, but it was the banking names like JP Morgan as well as Goldman Sachs that were coming under a bit of pressure, down about over 1%. Now, post the market close for India yesterday, Turkey did announce some measures to support the lira. The downside on the lira got arrested, but it is still hovering around that 6.9% mark. The Asia this morning, as a result, is trading in the green. Nikkei firmly up around over 1%. Kospi as well was trading in the green the last time I checked, and the SGX Nifty was suggesting a positive start. As far as the domestic cues are concerned, well, there are not many to play with other than the fact it is the last day of earnings season, and even if it is the last day, there is a slew of mid-cap earnings that are expected today. July WPI is also expected at 12 noon today. As far as the FII flows are concerned, we are seeing a tad bit of reversal. Last week we were talking how they were buying. Yesterday we saw that the FIIs sold around 970 crores in the cash market, while the DIs, they pumped in around 200 crores. But clearly the watch list for today will be rupee, how that one moves. Other than that, Nifty 11,400 on the upside is the level that was the high yesterday. And crude, because yesterday it was down about, reached the level of $71 per barrel, but today it has come back and it is trading below the $73 per barrel mark. So a lot to watch out for, especially the macro cues.
Okay, and what about stocks? You've named quite a few already, Anisha.
Oh, well, yes, a lot of earnings that are expected today. Sun Pharma being top on the list from the Nifty space. Other than that, Allahabad Bank, Dilip Buildcon, Fortis, GMR, Grasim, IDBI Bank. So a lot of mid-cap earnings really to deal with today. Other than that, a lot of earnings reaction are also expected. Tata Steel, for example, came out with a decent set of numbers. The India performance was in line, though the EBITDA was a tad bit lower than expectation, but it is the European business that really outperformed this time. Repco Home Finance, the loan growth is tepid, and even if you look at the profit growth, just about 9%. Apex Food came out with a good set because the net profit is up around 21%, though the revenue growth was a bit tepid at around 4%. LT Foods, a good performance because the net profit there was up around 14%. DHFL, it is a beat on all parameters, strong numbers coming in as the net profit growth is of around 35%. Ashoka Buildcon, a mixed set of numbers, profit just a tad bit ahead of our expectations. Oil India, the numbers are good. The PAT is a bit lower than our expectation. That is because the other income is a tad bit low. Other than that, the operational performance is good. TBC, not good set of numbers coming in. There is a revenue decline of 8%, but a profit decline of around 77%. So that will clearly be in focus. Tata Chemicals, overall decent set because the net profit is up around 8%. Care Ratings, it's a weak set because the profit is down about 28% for Care Ratings. Gati, it's overall a mixed performance because the net profit is down about 70% there. Other than that, important news coming on for Allahabad Bank, wherein sources tell us that the CMD Usha Anand Subramaniam was asked to step down. So that is one important thing to track today as well. Jet Airways, we have been hearing a lot of reports and clarifications on that. Yesterday also we heard clarification that any stake sale news is just speculative. TCS, the news that they have signed up one of the deals with one of the operators. JSW Steel would be in focus because they say resolution plan for Vardhaman Industries has been approved by a committee of creditors. So a lot of stocks to watch out for as well as the macro cues. Back to you.
All right, Anisha, thanks a lot for that. In fact, you spoke about the macro cues, so we'll take that point forward. After this short break, we'll get you a sense of the softening July retail inflation trajectory.
Welcome back. Well, on to some important news and in fact a key trigger for today, which is basically the CPI data which came out yesterday for the month of July, where the retail inflation has in fact slowed down to its lowest level that we've seen in the last 9 months. It's a sharp decline that we've seen in food and vegetable prices, which took inflation in July just a little over 4.1%, and we didn't see much of a movement which came in terms of the core inflation data as well. We have Lata here to decode the data for us. Lata, over to you.
Well, the number is definitely much lower than what the CNBC TV18 poll threw up. Our poll said 4.5% for the month of July, the inflation number, and some other polls were looking at 4.4, 4.45. But nobody gave us a number as low as even 4.2. So 4.17 is going to be an extremely pleasant surprise. The expectation is that with such a serious food disinflation, the prime reason for this big fall in the CPI number is the food disinflation, which has fallen to 1.37% compared to, around 3% that it has been over the past several months. So Thanks to this, it's the inflation number for the next month, August, is most likely to be under 4%. So when the RBI goes into its monetary policy meeting in early October or end September, it will have behind it a number which is below 4%. That will be the last August number. So the market tomorrow will price in the fact that there is unlikely to be a rate hike in October. Now, if there is even more disinflation in the August number, then perhaps it will remove all fears of a rate hike. But definitely tomorrow the bond yields are likely to move down from the current 7.82 levels, probably to a little under 7.8%. Immediate impact on the rupee may be a little difficult. It will depend on so many factors like the yuan, like the lira, like the dollar index, and like RBI action. So rupee we cannot be sure, but the bond yields are likely to move lower.
All right, bond yields likely to move lower. From there, let's move on to the big story from the banking sector. The government has removed former Managing Director and Chief Executive Officer of Allahabad Bank, Usha Ananthasubramanian, from service effective yesterday. That's not all. The government has also given a go-ahead to the CBI to prosecute her and Sanjeev Sharan for their role in the Punjab National Bank fraud. Sapna Das, our colleague, filed this report earlier.
Well, very quickly, I'll first read out certain lines from the formal notification that the Department of Financial Services has put out in terms of the exit of Usha Ananthasubramanian, or rather her removal from office. Let's also keep in mind that today was her last day at work, so she was actually effectively retiring from tonight onwards. So the line that is coming to the government is that had they not taken this decision, then tomorrow the government would not have been able to act at all. So very quickly, as is being pointed out, the notification says that why she should not be removed from office for having failed in exercising proper control over the functioning of Punjab National Bank while serving as its MD and CEO, which enabled the fraud in the bank through misuse of SWIFT at the bank's Brady House, Mumbai branch to persist undetected for several years, snowballing into a large account. So basically, she's being held responsible for the Brady House, debacle, for the SWIFT debacle, and we know the story from there onwards, how the Nirav Modi scam unfolded. So that's the reason why she has been removed. Not just this. Earlier, also the CBI had, basically come up with this kind of a thing from the government that they would like to go ahead with the prosecution, but a formal nod is definitely required. That nod has also been given by the government. The sanction for prosecution has been given to CBI so that they can move against Usha Ananthasubramanian. Definitely, now that she has been removed from the office officially, it's understood that the post-retirement benefits will stop because she had been divested of charge on 15th May, but she was still on the payroll and she was still getting her salaries as the dues are always given unless the final termination order is served. Not just Usha Ananthasubramanian, the sanction for prosecution to CBI has been given by the Finance Ministry in case of Sanjeev Sharan as well. So he was the former ED at Punjab National Bank. So these two names are there. But it will not end here because we are given to understand that possibly some queries are also being raised or some similar, requests have come in from Reserve Bank of India, and probably over the next couple of days, a few more names are going to crop up, and probably the sanction for prosecution at that level also will be given by the Finance Ministry to the RBI.
Okay, all right, Sapna. Thanks very much for that. We'll take a break now, but up next we'll discuss Tata Steel's Q1 performance. Once we're back, stay tuned.